So it's no surprise that Bitcoin did experience a sell-off today, which is why the entire market right now, for the most part, is pretty red. Now, I did mention in my video earlier from today that we need to watch lower time frame support, because if we start to lose those support levels, then we will target deeper lows. That's exactly what happened today. This is exactly why we watch these lows, and this is exactly why we prepare for every scenario in this space. Now, when we are looking at Bitcoin, it's not a crazy drop off, right? 121.4K, daily 2.2% loss. Ethereum is down about 5.1%. XRP is down about 4.4%. There is a lot of altcoins that are up in a big way. BNB actually just flipped XRP. It's up 25.9% in the last week, which is just crazy to see. And there's definitely a lot of gains out there in the market currently on the last 7 days. But, I'm not really worried at all when it comes to, altcoins going crazy right now and everyone's saying, oh, well, there you have it. It's alt season, right? Because I keep seeing a lot of these, influencers, especially on X, saying alt season starts now. We don't have any clear signal in front of us that is telling us that we are in alt season. So no, I don't think that we are seeing alt season just yet, but I do think that we're starting to see the opening act for it, essentially, which is showing us how crazy altcoins can move when they start to gain a little bit of dominance over the space. So again, right now, I don't think that we are in alt season. The last week has definitely been pretty good for crypto, though, if we're looking at the last week. But just looking at Bitcoin, this is what Bitcoin looks like in the last 7 days. Yes, it's up about 6.11%. We are trading around 121.4, almost 121.5K. We are finding resistance right around 122.18K, which, if we're thinking about this, yes, we want to see this resistance broken over. But until then, it's going to get respected. Now, we did hit a high of 126.2K. So this is a significant drop off in the last 24 hours, as you guys can see. Should we be concerned? Well, we shouldn't really be concerned unless Bitcoin starts to take out significant support zones, which we'll talk about here in a moment. But I want to play my video from earlier today. And again, this was around noon when I uploaded this. Just listen closely to what I'm saying here, because I'm going to reiterate exactly what I said and give you guys an updated view, which this will soon shift to us having a much larger sell-off on the higher time frame structure. However, looking at this thing on the 3 hour, we do have some lows that we need to watch. Like, for an example, this low from the 5th. All we really need to do is focus on structure. If we maintain this low around 122.7K, then hey, Bitcoin will continue much higher. If we lose this low, well, then we start to target additional lows on this chart. The next one would be around 121.7K, and then after that, we're looking at 119.9K. So this is why we focus on the structure. I said even on X that the main thing that you need to really watch in this space to understand if something's going to go much higher is just bullish structure. And so far, Bitcoin has been in a... So yes, Bitcoin has been in bullish structure for the last, few days. And that was up until this point, because again, now the main focus is that we are taking out some of the previous lows. So in the lower time frame, we have flipped bearish. Now, does that mean that we are bearish on Bitcoin going forward? No, it's just in the lower time frame wise, we are. So for an example, we did lose the first major low here, which was right around 122.6K. We lost that. You could see the significance of losing that because we absolutely went right down below the next support zone, which was 121.7K. So these two support zones are now out of the way. We lost them completely. We found resistance around 122.1K. We're going back in time. Is there a lot of resistance around here? Well, not exactly, but there is definitely liquidity spikes in which we spiked above it or around it, and then we completely rejected it. So yes, there is going to be a bit of a fight around that level. And then the next key support zone that we are looking at is 119.9K. Now, it's questionable on if we are going to take this out, but if we do, we need to understand and we need to be aware that there is a few levels in which we would be targeting after we lose that. Looking at this thing on the daily right now, currently, it seems as though we're trying to kind of chop around this level and build some support. Again, lower time frame wise, it's telling us that this support is not that strong. So we still need to be cautious. The main thing that I'm looking at here, I do have a blue zone on the chart, which we'll talk about here in a second, but we're looking at holding previous highs. So the first key thing that I would be looking at here is that 119.9K to like 120K region holding, because this is where all of those previous highs, which I don't think that I need to tell you guys, was all resistance. This is where we would be starting to break down below these highs and flipping that into resistance. So another big key area of resistance, in order for us to actually fight through to push to the upside, we would have to do again. And then also, if we lose these highs, we are looking at retesting the next highs on the chart, which is down here in this like 116.6K region to like 118.2K region. So again, this is why we want to hold those previous highs. We don't want to have more resistance to fight, especially at a time where we already have, such significant resistance on the lower time frame structure. And then we also have the resistance levels from August, and then also our recent resistance levels. So the main thing here is finding support above some key highs. I would love for us to find support above the July highs, but it kind of feels as if we might have a full flush back down into like the September highs. If that is the case, is it the end of the world? No, it's not. We will still be, holding higher lows, and then we would also start to target higher highs, especially on lower time frame structure. But then we would also be looking at the macros. So again, this recent move on Bitcoin, I'm not too concerned about. I'm not too worried about at all either. Ethereum did also have a sell-off today. Looking at this thing, I mean, listen, Ethereum has been pretty boring the last couple weeks. We recently did try to retest that previous high going all the way back to September. Failed to do so. We rejected it. And now we're just kind of looking at this chopping a bit until we start to create a higher high on this chart. With XRP, XRP has been in this, chopping formation for quite some time. I've been talking about it here and there. The main thing with XRP, and I've talked about this in previous videos as well, where a lot of people were saying like, oh, XRP is going, to this or that dollar amount by the end of the month or whatever. The thing is, with XRP, we have a ton of resistance, just like why we don't want Bitcoin to break a few levels. That's also the same, reasoning around XRP, right? We didn't want to see XRP lose some significant lows, but we ended up doing so. So now with XRP, especially on the daily, we have resistance around $3.05. We have resistance right around $3.13. We have resistance around, $3.33. And then we also have resistance around $3.56. Looking at this on the weekly, yeah, that resistance level is a little bit different, but we still have, over 3 core levels on this chart that we need to break over in order for XRP to still be bullish. XRP did recently create a higher low, which was very good, but we still need higher highs. So until then, no, XRP is not going to be extremely bullish on the chart. So we need to just pay attention to structure. Now, beyond that, what's one big thing happening this month that we are preparing for? Well, it's the Fed to shock these markets. We have been following some of the core dates, especially even this week. Tomorrow is FOMC minutes. Then on October 9th, we get the Fed's balance sheet as well. And then also on the 10th, we get the Michigan consumer sentiment. These dates are very, very significant to focus on. And, I think that everyone keeps saying that, oh, the Fed doesn't matter. We don't even need to focus on the Fed. We 100% need to focus on the Fed at this moment because, again, we are watching to see what the Fed is going to do next if we're going to continue to cut into inflation. Because although short term, very bullish, it's actually technically very bearish to see the Fed cutting rates into inflation at this moment. So that gives us a little bit of a warning sign going into 2026. But looking at what the Fed has been giving us, for an example, this is Fed Governor Stephen Moran. He's calling for aggressive rate cuts of up to 50 BPS in the next rate cut decision. If we're thinking about that next rate cut decision, guys, we're 21 days away. All right. We're about 3 weeks away from the next rate cut decision on October 29th. And this is going to be a 95.1% chance of a rate cut. And then also December, we have a 99.3% chance. So October 29th, we most likely get a cut. This is also right around the same exact time that we start to see those ETF decisions around altcoins, especially even XRP. It kind of feels as if we have the perfect environment here. I do think that the Fed is going to shock the system yet again, just like they did back in September. A lot of people said, oh, well, you know, the September rate cut didn't matter at all, right? Well, no, it definitely did. It's the number one reason why we're starting to see the markets cooking again, on top of the fact that we did get the government shutdown. The government shutdown combined with the rate cuts, it's all a perfect environment for bullish price action across the board, which is also why almost every single market is at all-time highs. The Kobayashi letter put out a post regarding this saying when everything is at all-time highs, you need to ask yourself something. What has changed? Safe havens, risky assets, real estate, crypto, global bond yields, and everything in between is hitting daily record highs. The denominator for most assets is in this case, the US dollar. Is what has changed. The US dollar is on track for its worst year in 40 plus years, down 10% year to date. Not only is the numerator going up, intrinsic value of assets, but the denominator is going down, USD. Confidence in fiat currencies is at multi-decade lows, position accordingly. And yeah, this is also why we are, seeing such significant growth around core markets. Like, for example, even gold. We know that gold just hit a new all-time high. The markets are cooking in a huge way. And this is all because we are seeing the Fed continuously, cutting rates into inflation. I mean, obviously, September was the first rate cut decision of 2025, but it seems as though we're going to get two more. And that's not really giving us the confidence that we need, because a lot of people have been saying, well, we don't need to be cutting rates. We need to actually be hiking rates. The main thing that we're looking at here is a recipe for disaster around the economy. And we've talked about it in previous videos as well on how all of this is planned, how they want to, shift to a new system. So they have to, destroy the old. But the main thing here is I feel as if we're just at unsustainable levels. With M2 skyrocketing, right? We constantly are seeing more and more updates around the M2 supply. The next release is on October 28th. The last release, which did happen in September, we have here breaking the US M2 money supply surged another 4.8% year over year in August 2025 to a record 22.2 trillion. This marks the fastest pace since July of 2022, in line with a 4.8% year over year increase in the prior month. The US money supply has grown for 18 consecutive months. Furthermore, inflation adjusted M2 rose 1.8% year over year in August, posting its 12th straight monthly increase. The US dollar's bear market continues, and this is exactly why the dollar continues to drop. People are losing faith in fiat currencies, and this is why we are seeing such a huge shift to gold, to crypto, to stocks, because again, nobody wants to be holding dollars at this moment, which is also what's causing, us to be extremely bullish at this point, because this is a very significant bull case, just like going back to COVID. I mean, look at COVID on this chart, right? The last time that we saw the M2 supply go absolutely insane was back in 2020 all the way through 2021. That supported the last previous bull run and the alt season of the market. So if we're thinking about this logically, the Fed is going to continue to cut rates throughout this year. It's going to make borrowing money easier. It's going to make, printing money easier as well. That's going to cause the M2 supply to skyrocket even more. It's going to cause the US dollar to get even more bearish, and it's going to lead to crypto being even more bullish, which is why, like I said, the Fed is going to continue to shock these markets. They are about to shock this market yet again on October 29th. We are going to be watching this closely. So far, the September market shock has already played out perfectly. I think that this is only going to continue from this point on. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord on the description below. And with that being said, guys, Nick, thanks for watching. Peace out.